Well, g'day there traders and friends, market participants and enthusiasts right around the world. Thanks for joining me. In this market update, also what I'll be speaking about is really referencing our top 12 individual trade list. A lot of trades have triggered over the past 5 days worth of trading, and it is important just to show you essentially what is required when we're sitting through resting periods or short-term consolidational periods and then waiting for the right opportunities to enter into stocks. Obviously, over the past month or so, the markets themselves, they have been pulling back. They've been pulling back into lower areas of support. This is aligned very nicely with a lot of our top 12 individual trades, and subsequently, we're starting to see the bounce flow through into the US financial markets. If I quickly show you the Dow Jones Industrial Average, pay attention to the top right hand corner of my screen. We closed up 173 points. What makes this interesting is that we are once again developing long lower wicks. This is essentially the third retest of this green box, which I've had drawn on my screen for about a month or so, and we're starting to see not only the bounce off from this green box, but the breaking of this very short-term bearish little trend line over here. So moving into the week upcoming, it looks as though the Dow Jones Industrial Average is set to drift all the way back up to about 22,130. When we get to this point, it should be, I guess, the location on the chart where we should see the market begin to slow, albeit temporarily. I believe that over the coming weeks, we are going to break above this all-time high, and the markets should continue the bullish trend to the upside. This sits very favorably for a lot of our stocks in our top 12 individual trade list. A lot of those stocks have triggered bullish. They have pulled back into their respective macro support areas. And again, a lot of, this is more or less coinciding with a lot of those oscillators switching back into more or less buy signals. And there's a lot of open positions, so to speak, in our list, which I'll be recapping in this particular video. But if we fast forward a little bit, you can see the S&P 500 going more or less bonkers over the past 4 trading sessions. Really, since Tuesday, collectively, these markets have just rocketed to the upside. Again, we're coming back to retest this very critical pivot. This is more so around 2,480. It is shy of that psychological round number, about 2,500. It's going to be interesting to see what happens on the S&P when we do get there. And the most advanced of the 3 markets, or closest to that relative or respective all-time high, is that of the NASDAQ. You can see we've just more or less retested the highs dating back to the 27th of July, where we got this really big outside day Morobozu engulfing candlestick. So you can see that over the past month, we've had to endure the pullback. The pullback has essentially run its course. Now we are seeing the collective bounce and the buying opportunity, or what was the buying opportunity, from these rising exponential moving averages. You can see how price was sort of lingering all around them. What we've essentially done is, during the resetting of these oscillators, we've just established that next consecutive higher swing low. All right. So you can see we're still making a series of higher highs and also higher lows. And this is the textbook definition of a continuation of that of a bullish trend. So things looking relatively favorable at the moment. We haven't seen any material sort of breakdown in terms of structure, which is good to see. And this is going to flow into, obviously, our top 12 individual trade list. Now, the week just passed. This is where it gets interesting. A lot of trades have subsequently triggered. Yes, they did trigger. Some actually triggered a number of weeks ago. But you can see collectively that the stocks are moving to the upward direction, which is fantastic for us. We had initial entries on Apple at 160.11, a second re-entry at 161.59, and a third re-entry at 163. Here we are. We're printing at 164.05. So Apple is continuing its bullish trend. Also, if I continue the template, you can see that we are getting the sign of confirmation, so to speak, of the ADX. It's turned up. It's like in the bullish breakout. And the CCI, the commodity channel index, printing above 100. So this is telling us that the trend breakout is legitimate. And we're expecting this or forecasting this to continue for a number of weeks, if not months, even potentially sort of close out 2017, depending on if, of course, the widely followed US markets break above their respective resistance areas, which is still, the question itself still hasn't been answered, although we have strongly rallied back up into that resistance area. Now, again, on Amazon, this was another trade, 969. Although we have only had 2 trading sessions above the trigger point, here we are, we're closing at 978.25. So a really nice little move, again, off this green respective area of support. A pretty decent move right here. If I change to these oscillators, first of all, you don't want to pay attention to the exponential moving averages. Amazon looks to be sort of consolidating sideways. So these buy-sell signals on the on the exponential moving averages, they are registering sort of false or fake signals. So you don't want to be paying attention to those. Instead, you want to be paying attention to the oscillators. And as you can see, the Stokes is turning up, the RSI is already adjusted, and the MACD, most importantly, has just flicked favorably in terms of momentum to the upside. So this is another really healthy trend or trade. I'm looking at this moving all the way up to about 1,033. So some huge upward targets on these first 2 stocks that we're covering. But again, we've got an initial position on both of these stocks, and we've had, even on Apple, a position on this for a number of weeks right now. We're only just starting to get sort of rewarded and compensated for holding those call contracts. If we move into Boeing Airlines, this is a stock which hasn't broken out yet. A lot of potential there. I'm not going to waste all too much time on this particular stock. The same with Baidu. What we're doing right now is we're just holding above these exponential moving averages as, of course, the oscillators reset. So this is looking relatively favorable for the week upcoming, if not for a number of months upcoming, if we can start to break above this little pivot that we find ourselves trading into. Now, I am going through this relatively quickly. I understand this. This is, just a sort of a weekend market update. If you have any questions, again, please email me, success@pivotpoint-trading.com. Now, going back into Caterpillar, this is another stock where we got triggered into the stock earlier in the month of August, but it's really not until the past maybe 2.5 weeks where we're starting to see the momentum break to the upside. You can see our retrospective triggers here. 115.33, 116.02, 116.77. We're trading at 118.28 now. So we're starting to get the momentum back into this stock. This is fantastic. This is also coinciding with the Bollinger Band squeeze. So you can see the volatility, the momentum, price action pushing back up into the top of that Bollinger Band. And this is looking to continue. So at the moment, we've got some relatively healthy profits, but I'm expecting these to continue to grow as we progress into the month of September, which again is another exciting prospect for us in our top 12 individual trade list. COP, another stock hammering constantly back into support. Support is holding. We've got positive or bullish divergence, which has been building since June 2017. Oscillators are flicking bullish. We've got the entry at 43.88. We're closing at 44.24. I'm expecting this to run to 47, and then all the way back up to 50 or 49.67, even potentially as high as 51.67. So pretty decent little trade there. It is starting to really sort of, I guess, form traction and really hammer into that support area. And it's going to be interesting to see how this happens. Now, obviously, there's going to be a little bit of market turbulence and noise along the way, and we're not expecting this to sort of rocket ship all the way back up over the next 4 trading sessions or so. This is going to be sort of a work in progress. You need to sort of push your horizons on these trades, probably into the month of October, even November. But at least we've got a footing on these trades, and a lot of them, if not the majority, albeit except one, are profitable at this particular time. CVX, another trade above 107.53. Dating back to the beginning of August, we had a breakout entry at 109.72. I was speaking a lot about this over the past number of weeks. So just to sort of disengage yourself emotionally from that short-term reflection of the price action, because as long as these markets remain healthy, and what I mean by healthy is that as long as they trend, and the big moment of truth right now is whether or not these markets can collectively overtake their respective resistance areas. If they can do that, a lot of these stocks are just going to continue. 115.40 is my target on CVX. We've got 2 initial positions on this. We'll see what happens over the next 4 trading sessions, but the next re-entry, so to speak, is about 110 on CVX. Now, if you move into Google at the moment is essentially break even. You can see again, we've got a short-term triple bottom, although I don't like to really call this a triple bottom. It's not really sort of happening in the right location. Generally with triple bottoms, you want to see these form at the end of bearish trends. Now, obviously, Google, much like a lot of tech, has been in a very strong upward bullish advance. It's looking potentially like a little bit of a terminal pattern up here. And when I say terminal, potentially a reversal, this is the same as Amazon. But at the moment right now, we don't have any justification really whatsoever to be looking at this immediately bearishly. If we say, for instance, push on back up and close the window at about 990, and then we start to roll over, well, then we can start considering, potentially some directional moves in the opposite direction. But as long as Google holds above this support down here at about 920, 917, everything is A-OK, and we're expecting that next natural oscillation all the way back up, first of all, to close the window at 990, but we may even get as high as about $1,000 again. That big psychological round number for a couple of these tech companies, which, have been struggling to sort of hold above that 1,000 level. Again, it's purely psychological, but if this bullish trend continues, I think we are going to break above it definitively, and then that psychological round number will then begin to act as support, and that's going to act as a basing, long-term sort of basing pattern if we can get above it, which is going to be another fantastic opportunity to leg into some original positions or some initial positions, or even build onto existing positions as well. If we talk about Goldman Sachs, another false breakout over here, short-term false breakout. It didn't signal that of a reversal. We pulled back very similarly to what I was speaking about with that previous stock, and you can see that we're just trying to push back up into this resistance. Once we overcome about 228, I think it's going to be off to the races for Goldman Sachs, although at this particular juncture, I don't have a trade set up, so to speak. And again, the same is true for IBM. IBM has been one of those stocks which has been an outlier. It has been relatively bearish. I mean, if you look back to February 2017, once we established that intermediate top, I mean, you can see this sort of big bounce that we saw from about 115 all the way up to 180 or so. What we're doing right now is we're pulling back into macro areas of support, and this looks like we're about to register that of a dead cat bounce. I'm not getting too bullish or carried away on IBM. However, we do have positive divergence, which has been forming for about 4, if not 5 months now, and we're starting to see, I guess, the recalibration of these oscillators, which have been extremely oversold, adjust back up into more neutral areas, if not potentially bounce back up into short-term overbought. If I change to the weekly chart on IBM, just to put this in perspective for you, pay attention to the oscillators. I mean, we're still registering extreme oversold signals. I mean, even though we have seen a pretty decent bounce off from about that 139 pivot, we're trading at 144, so we've moved about $5, but the oscillators on the weekly chart, that's meant to be W, by the way, my apologies for that. I mean, they haven't even moved whatsoever, so that's telling me that there is a little bit of gas in the engine, a little bit of a gas, or a little bit of movement in terms of percentages for the stock price, which is going to look really good for those open core contracts if you got in at 143.46. Potential to jump in at 144.73. However, this is essentially still counter trend. So all of the stocks that we've been looking at, more or less, they have been trending to the upside in alignment, in agreement with the overall market. They have been sort of supplementing each other very nicely. IBM is the outcast because, again, if we go back to the early stages of 2017, this stock hasn't really known any other direction than simply down, but very similar to what's going on with the US dollar. Some very strong parallels between IBM and the US dollar, although of course they're not really interrelated whatsoever. The movement in IBM is more or less what I am expecting for the price of the US dollar, although it hasn't happened yet. I'm still expecting that to sort of work its way through the system over the next coming weeks, maybe even days potentially, but especially over the next 1 to 2 months. Netflix is another stock which is recalibrating off from that macro support area. You can see it was resistance. We've pulled back into it. The oscillators have moved back into short-term oversold. This is aligning with the rising exponential moving averages. So we're getting multiple areas of confluence around this 165 pivot. We're starting to break above 171.12, 171.94. These are the two retrospective entries. We're trading at 174 at the moment. So another little profitable trade. I'm looking at this moving all the way up to about 190, 189 is my target. That would be the best case scenario. We're probably going to slow just above where we're currently trading at once we close this little gap over here. But if we can push up above it, get a close and then a continuation above it, this is going to be another tremendously profitable trade for us in our top 12 trade list that we've had to sort of wait for, be patient, be disciplined. But again, once we get into these trades and we feel comfortable with them, it really is the best part of being a swing trader. We can sit back and just feel comfortable with your risk profiles, then let the sort of the reward build up over time, which is fantastic. Now, to conclude, Tesla, it's been one of those stocks which hasn't moved. It's been late to the party on a few occasions now, but it looks as though we're moving into a symmetrical triangle. I was speaking about this over the weekend. Now, although we haven't broken out of the confines of the symmetrical triangle, this is potentially offering up a lot of opportunity. Now, this isn't something that we're looking to sort of act on immediately for the week upcoming. If we move back into the apex or sort of oscillate one more wave rotation or maybe even 2 wave rotations, we're going to get a full-blown Bollinger Band squeeze, and then we're looking at a $70, I believe, price projection. That's meant to be $70. I'm still trying to master this Pendra until after about 4 to 5 years, but we're looking at this potentially moving $70. Now, the beauty of symmetrical triangles is that essentially you need to remain neutral. That's the beauty of it. However, with my, experience in the markets, generally what happens is once you're in a bullish trend or even a bearish trend, if you see the symmetrical triangle set up, it is a short-term consolidational pattern or more so an intermediate pattern, but it generally sort of resolves itself in the direction of the underlying trend. And the underlying trend really since 2016, the late stages of 2016, has been up. No one can really disagree with that. So I am expecting this potentially, once it moves above 365 at the moment, to really sort of catapult potentially all the way up to about $430, if not $420 a share. Definitely overcoming this area, this swing high of resistance. But again, this is largely contingent on what the overall markets do themselves collectively. We need to see the Dow break above these figures. You need to see the S&P once again break above its respective swing high. And the closest of the 3 markets at the moment is that of the Nasdaq. Now, I just wanted to throw in a little bit of a sidebar, not to confuse anyone whatsoever, but I was speaking about the, actually I won't speak about the transportational average. Let me bring up the Russell because, they're very similar to one another, but I think I hopped on about the Russell earlier in the week. I think it was a Tuesday market update where I spoke about the Russell. And I was saying, look, I've got no doubt whatsoever that we're going to see this bullish move back into this red area of resistance. Now, just like the Nasdaq is retesting that resistance area, its respective all-time high, this is very similar for that of the Russell. Now, although we're not back up at 1,450, this is critical right here. What happens in this red box is very important. And it's most likely going to unlock the theme or the direction of what happens for the broader markets as we close out 2017. The reason for that is because when we see these these movements in price, when we get a break above a really important resistance area, and it looks as though we're going to continue the bullish trend in this particular instance, but we see a very quick, very abrupt, very sudden, very strong, very aggressive bearish reversal. When we see it pull back into, of course, it's sort of, how would you call this, a decelerating fan line, the bounce is very important because this is the moment of truth. Whether or not this is a legitimate false breakout and potentially a top, this is really the question that we're asking on the Russell 2000. It has been a little bit more advanced than the other three markets that I've already recapped. So if the Russell can overcome this red box, close above it, continue and get back above roughly 1,430, this is going to be a very strong signal for the markets moving forward. However, if we see some bearish candlesticks develop more or less right in this red box and we start to see a reversal, you need to pay very close attention to this because this may be some form of a terminal reversal pattern. It's too early to call at the moment, but the major line in the sand, so to speak, is this swing low over here, but also this trend line extension, all right, this decelerating fan line, which goes all the way back to 2009, which was the low of the GFC. So we've got these multiple areas of fan lines. And again, if we start to reverse off from this, and if we do crack this support area, crack below the bullish trend line, well, then this is going to usher in a larger correction for the three other markets and, of course, our top 12 individual trade lists. But this is a process that will take probably a number of months for it to develop. But again, you always want to sort of creatively sort of think ahead and plan for potential outcomes or options of what the market may throw at you, especially as we sort of round out 2017, which has been a relatively strong year, so to speak, for the markets. Very, very strong year. So on that note, everyone, I hope that has helped you. If you have any questions, again, email me, success@pivotpoint-trading.com. If not, sign up for that pro analysis class and you can go through the analysis for yourself and learn how to apply it to the select number of shares on the left-hand side of my screen, the markets, and of course, gold, silver, and the US dollar. All the best, everyone. Have a fantastic weekend. I think it's a long weekend this weekend. It's James signing off on behalf of Pivot Point Trading. All the best. Goodbye.